tax-related scam.
Warning the public about a new scam.
Phone scammers, binary option scammers, romance scammers, credit card scammers, identity theft scammers.
Scams are becoming more and more prevalent. Even there's AI scams out there. There's all sorts of stuff going on.
Everyone's subject to scams, and these things are actually a lot more common than a lot of people think.
Honestly, you just don't know. Like, so many people are happy just to give their details like that on the phone. It's not money people can afford to lose. And then all of a sudden this happens.
Yeah, when it comes to scams in crypto, also outside of crypto, and what is pushing those?
Yeah, that's a great question. I think it's the market's it's got a pretty brutal atmosphere at the moment. Feels like we're trading on the surface of Mars.
Crypto has taken a massive crash. All global markets have as well. Like, we saw $1.75 trillion worth of value get wiped out of the stock market a few days ago.
What could sort of cause that?
Hello, my name is Kane Bizzoni. I am head of analytics and research at Uptrade, and we have Jeff here today.
Hey guys, Jeff Zylstra, founder and CEO of Uptrade. Welcome.
Awesome. So we have a pretty interesting discussion today. A few different topics we're going to touch on around scams, about market manipulation as well. So yeah, really keen to get into this discussion.
Awesome. Fantastic.
Perfect. So let's start off with the scams, because I think that's a massive issue. And a lot of clients of ours also fall victim to these as well at times. So it's one that we want to, shed light on, and also talk about what risks are involved when it comes to those. Jeff, I know you know a lot about these as well, being a founder. You've also had your fair share of scams come across your desk. So it'd be good to hear from you around some of the stuff you see when it comes to scams in crypto, also outside of crypto, and what is pushing those?
Yeah, that's a great question. And I think it's really timely at the moment. It's really important that we do periodically sort of review what risks are out there and what sort of trends are trending around scams. Unfortunately, I spoke to one of our dear clients just recently, and yeah, his assets, most of his assets were actually stolen. But it was like through kind of like a social engineering type of scam. So social engineering, for those who aren't fully aware of that, it pretty much means that they're able to sort of either gain access, or they're pretty much just able to trick you into you giving up your assets. Essentially what happened is it was a staking scam. So what a lot of people are trying to do out there is they realize their assets aren't earning any yield. They're just sitting in wallets, and look, they're volatile, they move up and down. And naturally, just like our traditional financial system, people are looking for ways that they can, kind of earn more on their money that's just kind of sitting there. It's a natural sort of thought to have, right?
Sure.
The unfortunate fact of life is that a lot of the staking stuff, even if it is legitimate, staking 100% of your assets, 100% of the risk for 12, 15, 20% per annum gains, for me, it doesn't make any sense. But we are seeing people take substantial risks. So what this one individual did, I don't know the full details, but the crux of the story pretty much is that he had given like the lion's share, 80% possibly plus, of his assets across to a staking company, or someone promising some kind of yields or returns on his assets. And then him realizing that, okay, great, I'm probably getting compounded gains every month. The gains are usually pretty attractive to keep you in there and to keep you depositing more. And sometimes they charge really high fees for you they'll say, oh yeah, all the staking you've done in the last year, you're going to earn nothing on. We're just going to take your gains from that. So they make it really hard. Like, how can I put it? They don't make it easy for you to withdraw, or desirable to anyway on the surface level. And yeah, lo and behold, after a little while, when you do try to withdraw, you're unable to do so. So yeah, well, honestly, I've seen this time and time again. It happens a lot of prop firms out there in crypto. If anyone's like promising you any kind of returns, or these guys are making me 10% a day, 10% a month, whatever it is, anyone who can put a number on what they can make you, they are fucking lying.
Yeah, 100%.
You know, and I say that, I'm sorry, excuse my French. I'm really passionate about this because, you know, our clients are people, they're working class people. A lot of them are just everyday folks who said, okay, cool, I've sold my family home, or, you know, I've got a little bit of extra money in the bank or from my retirement or whatever it is. It's not money people can afford to lose. And then all of a sudden this happens. But obviously, you know, the awareness around it as well is the key part of it, because, you know, people who fall victim to scams, it's not like they do it on purpose, right?
Yep.
These scammers, and, you know, you can't say that, oh, that person was silly for doing that. It's like, well, no, these guys, that's their job.
Yeah.
24/7, 365, their job is to figure out how to move, you know, your money into their pockets, right? So for them, they've got pretty sophisticated, pretty manipulative tactics and ways to do it. But yeah, staking is a huge one at the moment. We are hearing a lot of people even coming to us, asking us how they can stake.
Yeah.
And people don't understand the risks. You know, like self-custody is king,
Yeah.
you know,
for sure.
or custody with uptrade's very good as well, because there is a degree of assurance there. So
Yeah, because they end up taking on third-party risk a lot of the time when you're looking to stake. You know, a lot of your tokens end up being locked up. You don't actually have access to your liquidity as well. So even if it's a proper staking functionality where it's actually real, sometimes you still have no access to your liquidity for days or, you know, a week where it's locked up. So, you know, there's always those risks involved. And as you said, you know, if it's too good to be true, it usually is. And that's what happens. So like, you know, anyone who's promising yield or who has unrealistic yield where it's like 20, 30% APY, like that is very unrealistic. You don't expect to see that anywhere in any market. So why do you expect to see it in this market? So it's something you definitely have to be, you know, on touch on when you're looking at these things.
And, you know, we saw this with Celsius, actually. For the viewers at home, I'm going to tell you a personal story, actually. So essentially, I was part of the Celsius blow up, but I was one of the lucky ones that actually got their money out before. So I managed to get my money out. It was like $250,000 USDC. I got it out like hours before the exchange essentially collapsed.
Yeah, crazy.
Right? And funny situation, I was actually sued in New York mid last year by Celsius. They came out of bankruptcy with $4 billion. And they said, hey, look, if you don't pay us, we're going to come for you. And for me, you know, I'm like, oh, geez, well, that was my money though. You know, that was the money I deposited. I only had it there for like 4 or 6 weeks. It was like my personal funds. And they still have the right to come after me, right? So this is called a banking clawback.
Yeah.
So in traditional finance, if a bank collapses, it doesn't matter what the reason is, due to fraud or whatever it is, internal fraud, such as Celsius, then they can go, all right, anyone who withdrew more than 100K within 90 days, we're going to come and sue you, and we're going to try and take as much money out of that as possible. For me, I managed to settle on a much smaller amount. Banking clawbacks are usually like 33%. I managed to get out at around 9-10%, which is fine. Still a bit of a hit on the chin, and I didn't like to give it up, but my options were, okay, I need to hire a lawyer here. I need to hire a lawyer in New York, and I need to hire a lawyer that specializes in international banking law and bankruptcy law. So for me, 3 months of that is going to cost me more than what I would have needed to pay them. Yeah. And look, I've got a business to run. I've got a life to live, and my energies are best spent elsewhere. So luckily enough, I was fortunate enough to be able to pay that. But there's a lot of people out there that, got completely rinsed by the last bear market or by FTX or whatever it might have been, Luna, any of the multiple things that destroyed the last cycle.
Yeah, there's many.
And they don't have that money. And they don't even have money to fight the lawsuit. So guys, like, the crux of the story here is even if you do safely get out and something blows up, like, they can still come for you. So understand that there are risks and dangers there are risks and dangers that you do not even see on the surface, such as this. Years after a business collapses, they're coming after me to sue me for money that was rightfully mine. But on the other side of that, on the flip side of that, I understand that while it might be a fraction of that money, because the lawyers, let's be honest, they come in and they take most of it, a fraction of that money actually did go to making people whole.
Yeah.
You know, people who didn't get their money out, people who didn't get their money out in time. I can go to sleep at night, you know, and not have to have that on my conscience that, had to pay them this money, because, I know that hopefully some of it went to a good place. That's the way I like to put it. So.
Yeah, exactly. And even if you were to fight that case, like a lot of the time it is not in the favor of the investor. These companies can afford big lawyers who are going to probably win most of these cases. So it's not even a battle worth fighting for a lot of people. But it is scary, the fact that you could just, have these clawbacks where you're probably, thinking, oh, it's all as well. Nothing's like, you're not in trouble or anything. And then like a year later, you get an email like, oh,
yeah,
you're getting sued. That is just something I would never think would be, a possibility until I've heard this story, which is, very scary for anyone who's, involved in those things.
Well, you see, it's not even about right and wrong at this point. Because I spoke to my lawyer. I go, this is wrong. This is morally not right. Obviously, there's a lot of things in life that are unfair. That's how life works, right? But, the situation pretty much was, the lawyer said, look, man, I'm sorry, this is how it works. You pay and you fight, or you settle. It doesn't matter what people sue you for. It can be for anything. But you have to settle at the end of the day. That's what stops you from going to court. Or they run out of resources, or they don't have resources to chase you. But in this case, it was like $4 billion they came out of bankruptcy with. I think they recovered a lot of the funds from Alex Mashenki, the former CEO of Celsius. So yeah, they had a lot of bullets in the clip. And for me, like, in contrast to that, I'm a small fish, very small fish in comparison. So for me, it's just better to let it go. But that's just the company, right? That's not like an actual, like, that was a legitimate company for a while.
Yeah, exactly.
But there are blatant scams out there.
Yeah.
So, I would say to the people at home, I would encourage you, because we've seen every scam in the book, literally every scam in the book. Social engineering scams where, people have stolen people's identities. This is why we're so hard on our KYC, because we want to make sure that we're dealing with the right person and the person's identity hasn't been stolen. Someone's not trying to empty their bank account. There's a lot of rampant fraud that goes on. And as a retail or high net worth investor, you may not really be privy to what we have to kind of keep an eye on. But it's all about consumer protection. But if you are going to go down the path of staking or trusting another company with your assets, please just reach out. We can do some really quick, easy checks that can define whether they're operating out of Nigeria or something.
Yeah,
you know what I mean? So please get a second opinion. Yeah, we're not trying to keep your coins with us. It's just, we believe we have a duty of care. If you can speak to people on the phone as a brokerage and you're actively asking for their opinion, then, why wouldn't you ask for their opinion if you're going to be taking significant risks with a huge amount of your net worth? Do you know what I mean?
Yeah, 100%. I think the other thing is we do see phishing scams and website scams. I think that's probably going to be more popular as someone a company grows Uptrade. Obviously Binance have theirs as well. I've had many fake phishing links from Binance emails saying, oh, are you having trouble withdrawing, use this link and stuff like that. So it's something that, we always have to keep in mind, and our customers as well need to be reassured that if there's anything that comes their way that might look socially engineered or maybe just doesn't seem right, they should always check with us as well. Just double check in with your broker or with, Jeff or with anyone in the team. Just so we can verify if these are actually real or not. I think it's really important just to touch on.
Yeah, you make some really great points, Kane. And, in a digital world, this isn't just native to crypto. Scams are becoming more and more prevalent. Even there's AI scams out there. There's all sorts of stuff going on. Even when the bank calls me to confirm, transactions, they call me up and they say, hey, I'm from this bank. Can you confirm your name and phone number and your date of birth and your address? And I say, no. because I don't know who that person is on the other side of the phone. I said, which department are you from? Oh, you're from fraud. Okay, fantastic. Which bank? All right, no problems. I look up the number myself and I call them back because honestly, you just don't know. So many people are happy just to give their details like that on the phone. But this is how the social engineering works. Over a period of time, they look for chinks in the armor and they steal pieces of information from you. And one piece of information may not give you the key to the kingdom. But if you work on it for 6 months, you compromise maybe one account here and you get their name and address here. And do you get what I'm saying? This is how most SIM swap as hacks happen. So for those who don't know, a SIM swap hack essentially is somebody picking up the phone, speaking to your phone provider, pretending to be you and saying, hey, look, I've lost access to my phone. I need to change, port the SIM across to another SIM. So they've essentially stolen access to your phone. And a lot of people who have two-factor authentication access via text message, this is why we never recommend people do it by text message because, people have lost hundreds of millions of dollars to SIM swap attacks, essentially. Being able to call up Binance, or sorry, you can't call up Binance, but, your local exchange or brokerage or whatever, and then it comes up as your number.
Yeah.
And then they can say, hey, I want to withdraw, and they go, oh, what's your date of birth? What's your address? If they got access to your emails or tell us about some of the most recent withdrawals you've done for security, you've got all the information. So it can be pretty scary stuff. So unique passwords for everything. Never use text message 2FA. Even go as far as, for your crypto accounts, having separate emails. I know a lot of people watching would already have that, but if they can get into your personal email address and you've got the same password for that as 5 other things, all they got to do is get into your Netflix account and then they can get everything else, right? So I think, especially coming into such a potentially big bull market coming up over the next 12 or 24 months, a lot of people watching that, they probably expect their assets to go 10, 20, 30, maybe even 50x. We're talking about huge sums of money here.
Yeah.
So now is actually a really great time to review your security, review what email addresses, what phone numbers have access to what are you secured by, what two-factor authentication, Google 2FA, or, we actually use physical 2FA. At Uptrade, it's mandatory for every staff member to use a physical key. And then you sort of scan the back of your phone and then it gives you the code, so no one can access that remotely.
Yeah.
I think Google implemented it back in 2020 and they hadn't had one hack ever since.
Yeah, it's crazy.
So
it's a good security measure for sure. Awesome. Well, I think that's a really good way to touch on all the scam stuff. I think a lot of people find that valuable. A topic that needs to be touched on once in a while for sure, because as everyone's aware, everyone's subject to scams and these things are actually a lot more common than a lot of people think. But I was thinking may as well move past this if you're ready, Jeff. Maybe talk a bit about the actual market, a bit about market manipulation that might be occurring, and maybe just an open discussion about where the market is right now.
Yeah, well, the market's pretty brutal. It's got a pretty brutal atmosphere at the moment. Feels like we're trading on the surface of Mars.
It's true.
Look, a lot of people were really hopeful coming into the end of last year that Trump was going to champion crypto, which to a lot of degrees he has done.
Yep.
But the market has obviously been negatively impacted by that. And it's not because of the announcement. It's not because of crypto itself, I believe. I think it's more around the global financial markets and how they're sort of reacting to what Trump is doing.
Yep.
There's a huge amount of sort of geopolitical unrest with, multiple wars happening around the world. That increases tension. Obviously, Trump making a move to stop funding Ukraine as well. Europe looks like they're coming around the back to step up, to unite, to help Ukraine. So there's a lot going on there.
Yeah.
I can understand
tariff wars as well.
Yeah, look, I can kind of understand where Trump's coming from. It's a situation where, it's better to try to squash a war as quickly as possible, even though honestly they aren't the aggressor, Ukraine. But it's one of those things. And yeah, look, there's just a lot of big changes happening in the US. And a lot of people are pretty uncertain about how that's going to affect the future during his term. And, traditionally speaking, if there's a lot of, dust that needs to settle, people are going to sell risk-off assets first, right?
Yeah, exactly.
So it's just one of those things. So what do you sort of think about it, Kane? Because I think you have some more pointy numbers that you could sort of bring to the table around this.
Yeah, for sure. I mean, look, crypto has taken a massive crash. I mean, all global markets have as well. Like we saw, $1.75 trillion worth of value get wiped out of the stock market a few days ago. Like a massive number, like things you just wouldn't expect to see on a normal trading day. I mean, crypto's also had big red days. Obviously, crypto is the most reactive market because of it being 24/7 and lower liquidity. It's easier to move, obviously. But yeah, as you said, geopolitical tension not helping at all. War tariffs, these are all things that are just making things so unfavorable. Even rate cuts and inflation, still being not coming down. These are just obviously creating an environment where there's just not much faith in investing on risk on assets, especially the crypto market as well, despite a Bitcoin strategic reserve actually being announced, which is, in my opinion, very bullish for the long term. People are seeing it as a short term, just not strong enough to have any price appreciation.
It's the biggest announcement in the history of Bitcoin, in my opinion.
Yeah, 100%.
ETF was big, but to be honest, ETF's good for regulation moving forward. But I doubt many people watching this, they're actually holding the assets, right? They're not buying ETFs, right? So while it's good for the industry, it says it's moving forward, but a Bitcoin strategic reserve is massive, especially for the US, right? So, yeah, and for that to be a negative sort of sell the news type event, whatever you want to call it, is pretty surprising. But also in the same breath, maybe not, because maybe there are powers that be that are driving these assets down. And I think that a lot of people watching could possibly agree with me by stating that now we have the biggest asset manager in the world, some of the biggest asset managers in the world, on our playing field, on our turf, so to speak.
Yep.
And how does that affect us, right? And we've known for a very long time, for several years, that leveraged markets do play a huge role in where Bitcoin goes, all right? Where the volatility is and all this sort of stuff, right? So do you think that some of these larger players are using some high frequency tactics or bringing their TradFi structures or trade engines to crypto and Bitcoin to sort of shake retail out?
I think at the end of the day, these are businesses, right? They're driven by profit and obviously their share prices and things like that. So at the end of the day, if they're going to be investing in Bitcoin or manipulating markets to their benefit, that is not something that you should be thinking is not possible. Obviously crypto is probably the most manipulated market out there just because there's lack of regulations and the being able to hide transactions a bit easier behind addresses and things like that. I think obviously definitely possible. They're going to be driven by making money at the end of the day. And I think at the same time, you look at someone like BlackRock, the biggest asset manager in the world, they've even said 1% to 2% of your portfolio should be allocated to Bitcoin. And at the same time, we were seeing these the assets going down in value. Do you reckon they're trying to accumulate a certain amount of Bitcoin for themselves, or other companies are trying to do that while the market is still so reactive? Because obviously when we get these big movements, or if we become a more mature asset class, like these big swings are going to be very less likely. They're not going to be able to have that same strength to move the market. So maybe this is the time for them to be making those moves for their benefit.
Yeah, look, and we all know that BlackRock and some of the big asset managers, like you said, they're businesses, and unfortunately, some of these larger financial companies, they work off numbers, they don't work off conscience. So, yeah, it is a believable theory that they are players at the table now, and they are, to a degree, they could be manipulating the market, right? Because we've never seen in history so many positive news cycles or news announcements for Bitcoin and crypto. Like an altcoin strategic reserve, we went up, and then Cardano was up 60%, and then the next day everything was down again. Like what could sort of cause that, unless someone's pushing the markets around, or there's some hand behind the curtain.
Yeah.
This is obviously all speculation, by the way.
Yeah,
we don't have
sure.
any verifiable proof as to why. We could probably look into some data sets and try to see what we can see, but obviously a lot of addresses pseudo-anonymous. We can't put a name to it like BlackRock.
Yeah. I mean, there was that one address that like had the $4 million 50x long on Bitcoin and ETH hours before Trump announced it on Twitter. So like people look at that and like, yeah, what's going on here, obviously. And at the same time, that's where I see, obviously, it isn't actually an 100% fair playing field, because anyone who has a voice in the industry, like any government, Trump, BlackRock, if you've got a voice, then you're always going to have like some influential factor on how the market's going to react. And that gives you obviously front running opportunities and things like that. So yeah, obviously can't rule those out.
Yeah. What I do like about Trump, though, is he's an agent of change, okay? And they want to make fast changes. Obviously, with fast changes comes fast volatility. They expect things to be turbulent for a while until the dust settles. But the money's made between the lines. And look, to be honest, everything is so cheap right now. Everything is so beaten down and people are so disheartened. And even when you start to feel it yourself, that's when, even like for me, for example, that's when I start to look at the other side and be like, all right, I'm feeling really bad about the market. Okay, well, let's switch that on its head and say, okay, maybe instead of fearing, maybe I should start to feel a bit greedy. Do you know what I mean? It's kind of like using that opposite indicator, using that indicator of fear as a time to be greedy. And everyone's heard about this. It's not that you shouldn't feel fear. You absolutely should feel fear, and you should feel greed. This is like a normal human thing. But using those as indicators to possibly do the opposite, I think that's where the real art form is, right?
Yeah, the saying, be fearful when others are greedy and be greedy when others are fearful, which is exactly what you're saying. It works, very, very well, because obviously, when there's mass hype and stuff, like usually that's the local top, right? But yeah, awesome. I mean, the other thing I think is trending at the moment, and I think is kind of interesting, a bit of a conspiracy theory at the moment, or just plain old speculation, but the US government has $7 to $9 trillion worth of debt that they need to refinance in the next few months. And a lot of people are like looking at this recent market crash thinking, is Trump trying to trigger a market crash so that people get out of risk on assets, move into bonds, and the inverse relationship between bond prices and yields. When bond prices increase, yields come down, they're going to be able to refinance their debt at a lower yield. So that is definitely something that a lot of people are speculating, because it makes sense for a businessman for like Trump to look into something where they can get a lower yield on their financing.
Well, think of it this way, right? If you're trying to clean up someone's mess and you're a savvy business person and you probably have a gigaton of other savvy business people and economists and whoever else you have backing you, common sense says that, you're going to want to get the best bang for your buck on any large deal that you put on the table, right? So, look, it does make sense, the theory. Will it play out? I guess we'll have to find out.
Yeah.
But yeah, I guess we keep it rolling.
Yeah, definitely. I don't like at the end of the day, we probably never find out, right? Like these are things that a lot of people like to speculate. And I think a lot of people try to find reasons for a lot of things when things start to go negative, right? Like, you get massive market crashes and everyone wants to point fingers like, oh, it's this guy or this is the reason. But at the end of the day, it is, a whole variety of reasons and it's too hard to pinpoint exactly what it is.
So, Kane, I've got a question for you. So, what do you think about the potential of a bit bond, like a Bitcoin bond?
Okay, that's another one that I think a lot of people were speaking about, maybe in back in February as well. So a bit bond, basically, allocating a certain amount of like your treasury bond to Bitcoin. So like a 10%, maybe 10% of it goes into Bitcoin at a certain yield. And what that does is it can also, reduce the financing for the government as well. I don't know if it's really something that actually will happen because, they haven't really introduced like these in the past. The government really only introduces, US dollar-based bonds. That's normal for them. So I just don't really see it as a possibility anytime soon, at least.
But I bet you didn't think there was going to be an XRP or Solana strategic reserve possibility before a couple of weeks ago, right?
Yeah. So yeah, the digital stockpile for those. I mean, it's true. Like
it does have to go through
happen.
the House of Congress, though. That needs to get some support, of course. It's just an announcement for now, right?
Yeah, exactly. So that's like they've created the digital asset stockpile, which is those. And then you got the Bitcoin strategic reserve, which is obviously separate, which is bullish in my eyes. I think they should be separate. But yeah, it is true. Like the adoption of these different cryptos are very unique in the way they're choosing it. Like I'm not sure how much thought is happening into this, but
you literally got like an altcoin strategic reserve before we got a Bitcoin strategic reserve.
Yeah, and I mean,
do you know what I mean? I feel like the world is such like it's not, I wouldn't say uncertain, but I'd say definitely expect the unexpected.
Yeah.
Like even the resurgence of XRP, a lot of people didn't see that coming too.
Yeah.
So even people on the street that I speak to who are just not even crypto people, they're believers in XRP.
Yeah. Exactly.
So
big community.
That's the thing. It's like, if everyone shares like a particular mind share, the same sort of thought.
Yeah.
And if people are putting their money on it, guess what it's going to do to the price?
Yeah.
Regardless of whether it's true or not. The rhetoric, around the banking and stuff like that, So yeah, it's an interesting thing.
Yeah.
So what would happen if we would get a bit bond? Let's just go into the theoretical now. I know that the chance may possibly be low, but let's just sort of go into that area.
Yeah.
How would that affect the markets? Do you think we would get another like sell the news and negative announcement, or do you think it would change the game?
No, I think 100% would change the game to some degree because bonds are one of the biggest investment classes in the world. You're safe from default risk when it comes to treasury bonds and things like that. That's like something that is really, really appetizing and incentivizes a lot of investors. So I think 100% will have a massive effect on the, crypto market in general. But yeah, it is one that I'm personally leaning towards not going to happen. But, as I said, who can predict these things at the moment? I think the other thing was around like Bitcoin's the strategic reserve announcement. They didn't really announce that they were going to buy any extra Bitcoin, which is, I think, why a lot of people were like a bit disheartened because they wanted a bit of buy pressure from the USA. They just said, oh, we're going to keep our other 200K and roadmap like how we could introduce or buy more without taxpayers paying more money. So, maybe that bit bond would be a way to also introduce like a new way to increase, the government holdings, as well as I think it would also become somewhat tax-free for a lot of investors as well, because that also being bonds and a yield, they wouldn't have to pay tax on their Bitcoin exposure. So
Well, the more you say it, the more we talk about it, the more it kind of makes sense in a way. You know, because if the government's not going to use taxpayer money, because that's their stance, right? They're trying to clean up the obscene government spending.
Yeah.
You know, they're trying to help the economy. They're USA first, right? So if they are USA first and they decide not to take taxpayers' money and they already have an ETF, maybe there's another financial product on the table. Maybe it's not bonds. Maybe it could be something else.
Yeah.
Interesting.
I was thinking even like, because I like to think about ways they could be accumulating because, I think there was a few talks about trying to, accumulate 5% of the supply by 2030, different things like that. So
Doesn't
like if
BlackRock already have 5%? And
I'm not too sure how much BlackRock currently hold in their ETFs. It would be close to like 4%, I reckon, or 5%. But yeah, like the US government have 200,000 Bitcoin. They want 1 million by 2030. I was thinking that, maybe they start to sell a bit of their gold reserve because if they've got like gold as a store of value and now they're saying Bitcoin is a store of value, and even David Sachs said, oh, Bitcoin is special. He said the US think Bitcoin is special. So if you've got two store of values now, like why not diversify some of your gold holding into Bitcoin? And that means you don't have to even use taxpayer money. Like that could be 100% like a way they could do that.
Yeah. I would say that if the US, it was on the cards for the US or any other major country to accumulate Bitcoin and make it part of a reserve or bonds or mixed in with some other financial products, it's in their best interest to completely obliterate the markets right now, just like what you were talking about the debt restructuring.
Yeah.
If you can make tweets and you can move markets, to potentially better the future of the US economy, and if you're a patriotic US citizen, why would you not do it, right?
Yeah. It's true. I mean, on an individual level, like this is obviously illegal, but like for a government, like a country who's regulating that, it's fair game, right?
The thing is the countries since humans have been around, have been doing crazy, like making big, crazy illegal moves, So, you have to have a look at what's to be gained and what's to be lost and kind of weigh up what that looks like, right? And yeah, I think there's a lot on the table here, and there's a lot riding on this campaign for Trump to come through and pull through what he says, with what he says he's going to do for the US economy. But it may take a lot of blood to get there.
Yeah, 100%.
Because you can't have all the great things. You can't have these massive changes without. It's like that cause and effect. For every effect, there's like I can't remember what it is.
For every action, there's a equal and opposite reaction.
Exactly.
Yeah.
Exactly.
Newton's law.
So yeah, thank you for that, Kane. So you end up in these types of situations, right? So there's so many driving factors as well. I think after us having this discussion and really fleshing it out, it's not just one thing that we can say is the smoking silver bullet here, right?
Yeah.
There's no smoking gun. It's just there's like 20 smoking guns, and they're all smoking at the same time.
Exactly.
So yeah, it'll be really interesting. But let's go into another hypothetical. Let's go into World War III.
Okay, this one's a big one.
Yeah, let's say Russia decides, all right, cool, Ukraine, we're going to agree to a ceasefire, and then they go behind their back and just continue to push forward and invade their country, and then hypothetical, of course, and then they push through into Poland or something.
Yeah.
What sort of happens there? Because I know the EU have been kind of really, tiptoeing around the situation. And not really trying not to get directly involved because of the potential for nuclear war, right?
It truthfully would be like the worst thing that could possibly happen. Like a World War III would be like, yeah, again, something that no one in the world wants right now. And it will be interesting because if you want to like, I'm not sure if you want to compare it to crypto and stuff, like what will happen to global markets. Obviously, everything goes down. Gold probably starts to rise as it's, a hedge against these black swan events and it's a safe haven and things like that. Does Bitcoin become that? That would be really interesting. I think that could definitely be something that happens, especially because then transactions are, very swift and somewhat decentralized. Like you'd expect a lot of countries to be cutting off their transactions across borders and stuff. So Bitcoin and crypto actually might become that safe haven or store of value that we've always wanted it to be. And obviously this is a really bearish case, right? We don't want World War III. We don't want any of that. But
it's like the potential for crypto to come out on top after we spill the blood of potentially hundreds of millions of people.
Yeah, exactly.
So,
not something anyone wants.
Yeah, but look, it's an eventuality. Like it's a potential.
Yeah.
To happen, right? Because once again, us as humans, we've always, been unhappy, or well, not we individually, but some certain individuals have been unhappy with what they have or what they've done, and some people just need to go out there and conquer things, right? So it's a fact of how humans are wired. We've just always done it, and now that we have weapons that can essentially we can destroy everything now.
Fuck it up.
It's a scary prospect because obviously you have Russia, you have China. Yeah, I think India's in there as well with BRICS. We don't know where these lines are going to be drawn. And like you said, if there are multiple lines drawn, you'll have probably neutral, then you'll probably have the West and like Europe or like Eastern Europe and Russia and stuff like that, whoever side with them, for example. Now you end up with issues with cross-border payments. You have really harsh sanctions, right, on certain different products. So a lot of assets out there, even staples, I think a lot of things will get thrown completely to the dust.
Yeah.
In terms of anyone trying to hold any value onto anything, right? And obviously, like you said, like we've seen gold really, really, what's it up today? 1.9%. You said?
Yeah, it's close to 1.8 or 9%, which is
it's just unprecedented, right? And this has been going on for a couple of years now. So it's like there's this increasing fear of impending doom.
Yeah.
And it's quite apparent in how gold is reacting, right?
Yeah, 100%. It is the safe haven or, the gold standard of any financial asset when things go to shit. So, to see that up so much, you gotta kind of look outside of the box a little bit. Like, is there something happening that we're not 100% aware of, or is, are people actually that scared that we could, fall into some global recession or World War III, stuff like this can, push the prices of gold and, and out of risk on assets. So definitely things to explore for sure.
Yeah. I think that, to be honest, if we did get World War III, I think that, the price of your crypto portfolio is probably going to be the least
of your worries.
Yeah. You're going to be worried about military conscription. You're going to be worried about, where maybe your next meal is going to come from if your net worth gets completely decimated, where you're going to live. Are you safe in your country? Are you going to be safe? Are you going to have to migrate somewhere else? So because who knows, maybe where you're living, it might become a big hole one day because of what might happen.
Yeah.
So I think, because we do get a lot of questions about, what happens if there's World War III and then the banking system goes off and this and that. I go, mate, well, I think basic staples like food, water, shelter, electricity, they're going to be the kind of the things you're going to want to focus on, I'd say.
Yeah.
If you're really lucky and you're really far away from all of that stuff, then great, maybe it might be different. But for a lot of people, I think that's the kind of reality during these times. And it's a scary prospect.
Yeah.
It is a scary prospect.
I mean, the other thing you said was like electricity. I mean, that has to be used for running crypto as well. So if there was ever a scenario like where electricity just shut off because of mass destruction, that could also impact our markets, and in a way that we've probably never seen. Obviously, with like black swans and stuff, the whole thing would basically start to collapse, I reckon. So that's what we kind of want to stay away from. We already have enough energy and renewable energy sources to continue to operate, so it's nothing to worry about. But like definitely something, if things turn bad, like that could happen as well.